Well, in line with commitments made by Finance Minister Pravin Gordhan in his February budget, Treasury has been helping the Reserve Bank build its forex stockpiles, having purchased about $2.2 billion this year so far. Leon Myburgh, Sub-Saharan Africa specialist at Citi, joins us now to unpack some of the detail here. Thanks so much, Leon, for joining us this afternoon. Well, we've seen Treasury keep its February budget pledge to help the Reserve Bank build up its forex stockpiles here. What exactly are we looking at playing out?
Well, essentially any country wants to build foreign exchange reserves, and from a sovereign risk point of view, high reserves are generally viewed as good, and we know that for a long time South Africa has had too few reserves. And essentially what happened during the course of last year is the crux to understanding what's going on here is understanding that whenever the central bank goes in and buys reserves to build its reserve portfolio, it actually has to sell rand on the back of that. Now that means that each time when they sell rand, they're adding liquidity into the system, and that is something that the central bank doesn't want, because in the long run that would be inflationary. So what the central bank typically would do is when they buy dollars in the market, it means they're selling rand, then they'll issue some money market instrument on the back of that to drain the liquidity out of the system, so that on a net basis there's no rand addition into the system. So they've got increase in reserves on the one side, and they've got an increase of debenture issuance on the other side to keep the rand equations neutral. So
with this relationship being fostered then between the Treasury and Reserve Bank in this way, I mean, what kind of impact has this had on our reserve levels? Because while last month's gold and forex reserve did show some spike, over the year so far we haven't really seen any major movement. So to what extent is this activity actually impacting the data? Well,
you've got to discern between the gross and the net reserves. Now we've had a long history where we look at net reserves, which is gross reserves minus liabilities. And in this particular case, the deposit account of the National Treasury is a liability, so it doesn't show up in the net reserves. However, when you typically from a sovereign risk point of view, you look at it in gross reserves. That's the global norm. And you'll see that the gross reserves have in fact increased. They're up at a level of about $42 billion versus the net reserves, which are only 38
So quite
billion.
A big gap then between the gross reserves and net reserves.
And that $4 billion difference is entirely ascribed by these National Treasury deposits. So that $4 billion sits in the gross, but it doesn't sit in the net number.
Yeah. So how has this new dynamic in the forex market worked to influence the rand itself? Because certainly one would have assumed that World Cup related inflows would have had much more of an impact on rand's strength than it's had.
Yeah, well, exactly right. I mean, we'd expected a rand to appreciate during May and June as well, and it didn't. And the reason for that, I mean, we can sort of make a guesstimate saying that there was about $1 billion that came into the system on the back of World Cup flows. But now we know with hindsight that the National Treasury had sat and bought about $700 million. So they'd essentially neutralized, a positive effect, or a rand positive effect during the course of June.
Yeah. Well, if we take a look at it, overall, this is quite a shift that we're seeing play out here, with Treasury buying $2.2 billion, as I was saying earlier, since January, implying that for now it has the cash to actually do this. The next question is, how long do you see it being able to manage fulfilling this role going forward?
Well, I actually think that they've come close to an end, because when you do projections, I mean, they're very cash flush at the moment. At the end of June, they had 151 billion rand of cash between central bank and commercial banks on deposit. But when you take the projection going forward, they're now going to go into a seasonal deficit period, running fairly large deficits in the next few months, and that's going to draw down on the cash balance. And this means that they actually don't have a huge amount of cash extra which they can throw at accumulating reserves. So I wouldn't be surprised that if for now we see the end of the National Treasury buying reserves. If they want to build reserves, it'll have to be the central bank doing it in the next few months, unless there's a meaningful improvement in revenues, or something else changes in the equation in the coming months.
For now, helping curb some of the unwelcome rand gains that we've seen, but where the Reserve Bank has said that it will not act to weaken the rand, it has no target level on the rand. What does this imply of a possible policy shift in that regard, and them changing their stance?
Well, to some extent you have to merge the policy, the fiscal authorities and the monetary authorities together, because they work together to the same goal, or at least that's the hope, for the authorities to do. And both of them realize that they need to build the reserves to get to a better sovereign credit rating. So I think what's happened here is it was a shift from the central bank to the national treasury, not because there's necessarily a dramatic change in what they're intending to do, but just simply the treasury was able to sterilize the reserve accumulation, which the central bank was finding increasingly difficult to do. So it was the national treasury stepping in saying, look, the central bank, we can help you out at the moment. We've got some money we can throw at this, we'll help you. Now, their accumulation was pretty aggressive, though. It was $2.2 billion. You know, so you might ask, but was this a case of, you know, wanting to stem further rand appreciation in the face of these World Cup inflows? You know, I guess that would probably be the National Treasury, which would have to, you know, draw a definitive
But for now,
answer.
they're quite steady on their position that they're not going to be intervening in the rand's movement as such. Interest rate decision is scheduled to be released next week, and that should have some impact, either if we see a cut or a rise in interest rates, impacting, of course, our carry trade position. What's your outlook in that regard?
Well, I think they don't change, and I think they don't change primarily driven by the current wage negotiations that are taking place. You know, we've seen Eskom settle at 9%, we've seen Kumba rejecting an 8-9% offer, we've seen a number of relatively high wage, and these wage negotiations seem to be settling at high levels to what they were settling in the first quarter. I think the central bank will find it difficult, even though the short-term inflation forecasts have improved. What's happening with wage, and you could even throw in administered prices. Look at the city of Johannesburg increasing its tariffs by average of 12%. You know, these are numbers which will worry the central bank, and I think that they will have to look through this and say, well, short-term inflation expectations are improving, but we've got some problems sitting in the system, and in fact, Jill Marcus alluded to that in a recent speech where she said we've got a number of economic participants sitting in the system, and we're not all working together to the same goal. We must recognise that. Why is it that we have rising unemployment, but wages are growing at such strong levels? And I think she's frustrated, saying, and that's going to tie their hands, I think, to some extent.
Well, certainly interesting to see how that all plays out. Thanks so much, Leon, for having joined us this afternoon.